Judith Rosa from DG Regio, Head of Urban and Territorial Development of the European Commission, please. And the representative from the EIB, Jerry Musca, hello. So as we see in the previous roundtable, there's a strong involvement of member states to go to EIB to co-finance social housing. At the same time, there's a big diversity. You have a lot of member states who are now finding natural to go finding EIB loans to develop social housing, or not. Why? We will see in the first part of this debate. We also have in mind that the European plan and FC doesn't work really in social housing. Most of member states continue to get EIB loan classically and not use guarantee provided by the FC. So it could be interesting to know more about that. And also we have the problem of state aid. It's a big question for EIB to fulfill the state aid regime. As you know, we have a different conception of the SGI of social housing. It's for us, for Europe, it's up to the member state to define the scope and the aim of social housing. DG Competition has a narrow point of view on this issue, and we have to fulfill this criteria, this procedure to get EIB loan. So my first question will be to Jean. You are one of the only member states who don't use EIB loan. You don't. What is your opinion on the future on the Irish using EIB loan?
Ireland is accessing EIB finance through a government agency, the Housing Finance Agency, and there's a 300 million facility in there at the moment. And in fact, my own organisation, my own housing association in Dublin, we're one of the first housing associations to start building again. And we're building a 70-unit apartment complex, and that's using EIB funding through the Housing Finance Agency. The problem with it is that, like a lot of post-programme countries, this counts against the public sector borrowing requirement in Ireland, and it poses problems for government in that it adds to the proportion of GDP debt. And so there's a limit to the amount of money that can be accessed through the Housing Finance Agency. And so what I've been trying to do is to set up a different aggregator so that money coming from EIB or from the Council of Europe Development Bank goes through either a commercial bank, or the latest idea that I'm exploring is with credit unions, where there is an alignment of social and ethical objectives between housing associations and credit unions. And that would begin to solve the issue of the public sector debt issue, because it would be seen as off balance sheet. Because the financing mechanism for social housing in Ireland is a quasi-lease model, where there's an implicit state guarantee, because the local authority leases the properties from a housing association, and the lease payments that the housing association gets from the local authority is actually used to pay the loans which has built or acquired the units that the housing association has got. And it's a neat way of being able to access off-balance sheet finance. But because we've been steered towards using Housing Finance Agency money, it has created a problem with on-balance sheet. The other issue that there is in Ireland, and I'm not sure whether it's the same for other countries where there's lots of indebted housing lying around, is that business with them, because they are taking large numbers of units in the thousands. But the problem is that these will be turned around by these vulture funds in a 4 or 5 year time frame, and they will be sold back to the population of Ireland at a 50% markup, having been bought at a 60% discount. It's because we haven't got better access to finance that we're not able to compete with that. So that's a problem now, and it will be an even greater problem in the future.
Okay. Thank you. Jeremy Muscat, in the perspective of the development of those kind of loans for social housing, do the state aid issue is a big question for you? How to deal with that issue? For instance, the loan you give to social landlord, do you consider as state aid or not? And do you have to be sure that the program you co-finance is okay with state aid rules?
Well, to answer the first question, the financing that the EIB itself provides is not considered state aid. So it's considered, the EIB funding itself is considered as let's say, it's not considered as public aid support. When we look at schemes that we finance, however, we do have to take into account the wider package and look at the overall scheme and the way it's regulated, and therefore for us all our projects have to be in conformity with the EU rules and EU policies, and so it's important that during our due diligence we make sure that the overall financing scheme is state aid compatible, and that's where it's important for us to be assured of that, whether it's by warranties or confirmations from the regulator in the relevant country that it is, let's say, SGEI compatible state aid, or whether it's not regulated according to state aid at all. There aren't subsidies in the program, but we have to assure ourselves that the programs we finance are state aid compliant, and we have a process that we go through for all our financing where we consult with the European Commission as to the validity of our projects according to the Commission's perspective, and of course they can also ask about this if they wish to. So it's an important aspect that we consider during our due diligence, yes.
Okay, thank you. As we see in the priority of the Union, you have energy, you have climate change, you have immigrant. All those priorities ask member states to develop new dwelling, new social housing. How can EIB participate in this process? Do you have proposal? Do you have action to facilitate the access to your loans by member states, by directly housing association? Have you some thinking in terms of EIB to develop those activities?
Well, perhaps I could answer that by referring to what you said about the Irish situation, because I think it's quite an interesting example of where you're looking for solutions which are not part of the public sector borrowing requirement. You're looking for instruments that could support, let's say, a more private sector oriented approach, or a regulated public sector approach which may not be classified under ESA rules as public borrowing. And indeed, I think that within the EIB, using the FC, the Juncker Plan instrument of the European Fund for Strategic Investment, we are able to explore structures which don't rely on the same level of public guarantees that we have been used to financing with in the past. So we are financing private housing enterprises which don't require state guarantees, but which are clearly regulated in the regulatory framework. Now, it's not for us to decide whether it's part of the classified as part of public borrowing or not, but it is for us to help in structuring projects, to look at the risk partition in the project and to find ways of financing projects which may be higher risk given the way they are structured. So obviously we're not looking at ways of circumventing public sector borrowing rules, that's not the idea, but clearly where there is a genuine opportunity to provide additional financing for social housing which is justified according to public objectives, then we can look at ways of let's say, securing and providing support for these kinds of projects. That's part of the answer. Perhaps I could also add that we have the European Investment Advisory Hub, which is there to help support the preparation of FC-related investments. I'm not aware of whether there have been any requests for looking at social housing projects under that, but it's, in theory, it's possible that that the bank could provide advisory support in the setting up of such approaches. And I think actually in terms of urban development funds and financial instruments, there has been some discussion of how these kinds of instruments could be used for social housing.
Yeah. It's a good transition to move to Judith. So you work at the DG Regio in the European Commission. We are regular meeting the concept of EU urban agenda and housing dimension. How can you use EIB loans in your process of developing EU urban agenda?
Okay, so the urban agenda is focusing on various themes, but also the objective, we have three main objectives: better regulation, better funding, and better knowledge. And I think the EIB has a very clear role in many of the themes that we deal with, such as housing, for example, is one of the main themes. For the better funding, but even in some cases maybe for the knowledge or maybe for the regulation, there can be very useful inputs coming from the EIB. So there is one aspect which is being part of the overall picture to make the financing and funding more accessible, more clear, maybe more simple. Although listening to the discussion today, I don't envy people who need to set up these instruments and funds. And then, of course, we do hope that also concrete projects and concrete financing from the EIB, whether classic EIB or FC, will also support these, maybe together with the RDF also in some cases or other funds.
And on the issue of state aid, you also work with DG competition, I presume. What are the current debates you have inside the Commission on this point of view? Because it's a key issue to define the scope of social housing in this process.
Well, our discussions are actually taking place more in the partnership of housing, of the urban agenda. So this is one of the key topics that is being discussed. I think in every meeting, this is one of the hot topics. And also we have other stakeholders who are not at the moment part of the partnership, but also raising various issues from the private sector, especially around the state aid. So I think actually that this outcome of the discussions of the partnership in the state aid area will be very interesting, because next year the state aid regulations that can feed into the revision of the regulation.
And one other key issue, as you said, is the simplification of procedures to access to EIDF or to EIB loans. In France, the government proposed to put regional policy and aid coming from regional policy outside the state aid regulation. Do you think it's a good way to simplify the question?
It would be great. No. I mean, besides the joke, somehow it's of course not official what I'm saying. I'm just sharing the mood in DG Regio is that, well, now everybody is outside of the state aid rules. We are the only ones inside the state aid rules. So we are losing a bit our attractiveness because of that. So, but jokes aside, state aid rules, they are there for a reason, and they are good reasons for them to be there. The issue is to make them maybe easier, more transparent, more simple, and really maybe rethink whether each of these obligations are really necessary.
Mm-hmm. And do you think in the future it will be more easy to work with ERDF and with EIB loans on a global project? Because as we see in the example, we have very few examples where we have ERDF and EIB loans. We could have ERDF, we could have EIB, but having both in the same project is very, it's not really.
I'm not sure I agree with you, because in fact we have now, it's probably now the third generation of financial instruments, even though we didn't call them like this in 2006, where we actually invest together with the EIB in these financial instruments. Now what makes it slightly more complex is the FC, because FC is not a financial instrument. So anyway, but all these funds and all these loans can be combined. There is a brochure, I brought it. I don't know if it's of any help, but please have a look. This is about combining the FC with ESIF. But as far as I know, there is no major issue with combining ERDF and EIB loans or EIB instruments.
Jerry, you want to add something?
Yeah, maybe I can just confirm what Judith has said. I think in many ways that there's a little bit of a mystery about FC. Let's say, are housing enterprises making full use of FC? Well, actually, it's not really the question for the housing enterprise. The housing enterprises don't care whether it's FC or other sources. That what they care about is if it's a good source of long-term funding which meets their financing needs. And let's say it's up to us to worry about whether it's FC or it's regular EIB and how it works, and it's up to us to solve those problems. So I would say that actually, if you come back to this more general question of EIB funding with ERDF and ESIF funding, in fact we fund huge volumes of co-financing with the structural funds, and we have done, as Judith was saying, over many years and many programming periods, and over many different sectors. And so I think actually the history is there. We've done it across different kinds of operational programs in all different sectors. So in a sense, it's, I think, up to the member states to find ways of using the operational programs and the structural funding to support social housing. And if that is done, I think that certainly with regular EIB funding and EU co-financing, there should be no problem, as we do in all other sectors. The question is of the countries to allocate social housing as a priority under their operational programs. And of course, when we talk about riskier structures where there could be FC involvement, we need to find ways to make sure that the co-financing is compatible. But the bulk of it will be under regular financing instruments that we know well.
So it's up to the member state and to the region. Most of the member states, it's the region who manage structural fund to do the job and to make this work.
Yeah, absolutely.
Okay, do you have any question on the different action, please?
If I take, because I'm working around the FC and the ESIF, and if I take around the energy efficiency measure, and if I take the example of France, it was before the FC were there. It was several projects, and almost all regions have put a certain amount for ESIF financial instruments around energy efficiency. And after the FC was created, most of the project have been financed through FC. And now we have a lot of difficulty to support the region to create a financial instrument with ESIF. It means in a praxis, both are not really compatible. So, like it seems, they are concurrent, in fact, in the issue of energy efficiency. So, and therefore, I don't know. I know the brochure, I know the Annex 3 and so on, and I know also that we have one instrument in Nord-Pas-de-Calais 3 which combine, but it has been very difficult, and I think so. It is not around energy efficiency. It is SMEs mostly, and it is a completely other sector. So therefore, I think in the housing sector, energy efficiency and so on, I think the praxis is not goes not in the direction you mentioned in combining.
Well, my first reaction, then I think Jerry will also have something to say, but my first reaction is that from the angle of the regions and beneficiaries, well, do shop around. It's better for you that you have various instruments, so you have, if it happens that FC is a better solution, why not? If it happens that ERDF combined with EIB is a better solution, go for it by all means. So I think from your perspective it adds to the array of possibilities. Maybe from my perspective it's a bit difficult because then we have to also rethink to some extent the strategy, or actually the countries and the regions need to rethink how they invest ERDF, for example, in energy efficiency, because they might think, okay, I can do this segment with FC, let's say maybe the more risky ones, and then maybe I'll do another one, or maybe I invest in those that are not bankable at all. So it could, you can look at it also as opening up the funding for a wider range of interventions than until today.
Yeah, just to say, I think that a quite large proportion of the FC supported projects have actually been in the energy sector, and including in energy efficiency. And Nord-Pas-de-Calais is a very good example. I think that when we have more risky structures like this, they tend to be more complicated generally, and they tend to require more structuring, and so it's not necessarily surprising if it were a little bit more complex. But this is where we have our teams ready to try to resolve these issues. We have the advisory hub, we have the financial instruments division that is willing to discuss and try to resolve any questions around these types of schemes. And I'm quite convinced that as Judith was saying, if we can't find a way to do it one way, we will use another approach. But good projects which can be where we can unlock funding and increase the volume of financing, particularly for energy efficiency. And we have a different division, which is not my division, tackling energy efficiency, but it's a very strong priority for the bank, and I'm sure that we find a way to do it.
Yes, thank you. My name is Sebastian. I work for Dutch social housing organizations. So my question is about the assessment of risk, actually. I want to know for the EIB especially, how do you assess the risk? Do you assess them based on the projects? Do you assess them based on the financial health of the company, the organization itself, and how much weight, or is it required to have a public guarantee behind every dollar to limit that risk? Thank you.
Well, with the EIB supported projects, we look at all the different elements of risk actually. So we look at the risk of the project itself, which is particularly where my project, the projects director, which I'm in, is very much focused. We look at all aspects of risk, so not just financial risk, but also the risk of whether the project will achieve its economic objectives, the construction risk, the technical risk associated with the project, the planning risk, and so on. We then look at the risk of the company. If it's a housing enterprise or housing company, we look at the financial risk associated with that company and with its credit quality. And then we look at the risks associated with the wider regulatory framework in which the program sits. So clearly we look at all these different kinds of levels of risk. And obviously the extent to which we look at each one depends a bit on the structure and the risk characteristics of the project. But we certainly don't require bank guarantees or public guarantees for all our projects. In some cases where we consider the risks are acceptable, we're able to take risk without such guarantees. But clearly we require certain types of security, but we are able to take non-recourse and limited recourse financing risk in the housing sector.
Hello, I'm Valentina Chemi from Social Platform, and I have a question both for the Commission and the European Investment Bank. It seems to me that very often projects go especially to some member states, while the need for social infrastructure is sometimes more needed and urgent in other member states, especially in those that are hit the most by the economic crisis. And one variant can be really the public investment, how it is calculated, etc. But sometimes it's also the capacity of the stakeholders and also the managing authorities to really promote good projects. So, what are both institutions doing to try to cope with this challenge? Thank you.
Okay.
Good question.
Well, in fact, social inclusion topics are very much part of the structural funds, cohesion policy agenda, and ERDF gives a very substantial support. It's about 20 billion, more than 20 billion euros across the member states. But then, you know, the answer is the usual one in a way that the member states have a huge freedom to design their programs and their intervention strategies. So we don't have a specific earmarking for social type of expenditure, rather the opposite. We have for other types of objectives like smart growth, energy, innovation, research, this type of things, not for the social ones.